Welcome to my channel. Please like, comment, and subscribe. To know the meaning of interest rate and its types. Interest rates are a term that is often used in the banking world. Banking customers must be familiar with this term. However, not many really understand the meaning of the interest rates. Then, what is the interest rate? The interest rate is the remuneration of value given by the borrower to the lender of funds or money. Usually, interest rates are expressed as a percentage. The Financial Service Authority or OJK it is attitude picks. Bank interest rates are remuneration provided by banks to customers who buy or sell their products. Interest can be interpreted as the price that must be paid by the bank to the customer who has deposited and the price that must be paid by the customer to the banks if the customer gets a loan facility. Based on the explanation above, bank interest rates are divided into two types, namely deposit interest and loan interest. Deposit interest is given by the bank of funds deposited or saved by customer at the banks. Meanwhile, loan interest is the remuneration set by the bank to the borrower for the loan he gets. Quote from Investopedia, interest rate apply to lending and borrowing transaction. This interest rate is applied to any party who borrows funds from the bank to buy a house, finance a business, to pay tuition fees. OJK also explained that there are 5 types of interest rate in the banking industry. The 5 types of interest rate are described as follows. Fixed interest rate. Fixed or fixed interest rates are interest rates that do not change within a certain period of time until the maturity date or during the term of the loan. An example of a fixed interest rate is the interest rate that applies to low-cost home mortgages or subsidized mortgages. In addition, fixed interest rates are also used in motor vehicle loans. Floating interest rate. Floating interest rates are interest rates that change according to market interest rate. When market interest rate rise, the prevailing interest rate will also rise, and the same applies vice versa. An example of applying floating interest rate is for mortgages with a certain period. For example, in the first 2 years, a fixed interest rate is applied, but in the following years, a floating interest rate is applied. Factor affecting interest rate. The following factor also affects the rate of interest determination. 1. Bank need more funds if demand for loan is high. 2. The bank is targeting a bigger profits. 3. Government policy. The determination of the maximum interest rate must not exceed the limits set by the government. 4. Collateral quality. The easier it is to disburse, the lower the interest paid. 5. Deposit or loan period. The longer you save, the higher the interest paid. 6. The type of product you choose. For example, car loans and home loans have different interest rates. 7. Reputation of the borrower or company. The interest rate that the bank provides depends on the reputation of the borrower. 8. High competition between banks. How to calculate interest rate? You already know the types of interest rate based on their nature. Furthermore, the types of interest can be distinguished based on three types of calculation. Thank you for watching this video. Don't forget give, like, comment, and subscribe.